Hello, I am very happy to be with you once again, not in person, but recording a video on my views for the vegetable oil market as it is evolving, and indeed as we are meeting at a very critical time at Globoil Dubai. So here we go. First of all, congratulations to TEFLAS and to the SEA on organizing once again this landmark conference, Globoil Dubai, with a range of subjects being discussed, not just vegetable oil. And that truly makes it not just a vegetable oil conference, but a commodity conference with a focus on the fastest growing market for commodities and for veg oils, which is Africa. And Dubai is rightly the stepping stone to Africa. And that is why the content and the location of this conference is so apt. So, heartiest congratulations to TEFLAS, the whole team, and our SEA for being the principal sponsor, putting it all together. So, let's go straight to the main question. How far have we progressed on the price outlook that was enunciated in Kuala Lumpur earlier this year? Let me tell you, price forecasting has become more difficult than it used to be because of the presence of a certain gentleman in the White House who believes in tantalizing the market from time to time and doing things which enhance the volatility of the market. And this volatility is the key to excitement and interesting times. Let us recap what I said at POC earlier this year in Kuala Lumpur. I said palm stocks and supplies remain tight until the end of March 25. Relatively high prices will prevail, which are not conducive to demand expansion. Soya oil has won new demand and will fight to retain its market share. But soya meal is going to remain a burden. This is what I said earlier this year. The trade war and reciprocal tariff adjustments continue to shape oilseed flows. We have with us the Trump presidency and the three T's: Trump, trade wars, and tariffs. President Trump's playbook is now very well known. The market almost anticipates what he's saying and reacts in a predictable manner. So his shock and awe therapy, his therapy of surprising the market, does not seem to be working anymore. And the main instrument of biodiesel policy, which the White House controls, it has so far kept us guessing. It has made no moves, and the biodiesel policy of the United States is today the number one volatility factor in soybean oil. On palm, production recovery is underway. The Indonesian B40 program is on, finally, but we do not yet know about the faithful compliance of the entire B40 program. This is because only half of it is now subsidized, half is not subsidized. And the non-subsidized portion is where I have a little doubt. On the other hand, US soya plantings are off to a good start. And very importantly, crude oil, WTI, these prices are under pressure. The Saudis have in fact increased production. The world is awash with crude oil, awash with natural gas. Crude oil prices are now below $60 a barrel, and hence the subsidy required to make possible biodiesel viability is much higher. We must also bear in mind that the US dollar is weaker substantially than it was in January. Palm prices are now well below 4,000 ringgits, exactly as we had predicted in Kuala Lumpur. On the other hand, palm is now gradually regaining its competitiveness. But the Trump tariff tantrum has cast a shadow on the world economy. And as a result of that, economic growth has slowed and demand remains soft. Where are we in terms of the year 2025 so far? The stock build in palm has started, and the first numbers that come out on Monday, the 12th, from the MPOB will perhaps impress, perhaps surprise the market of the stock build in Malaysia. Malaysian stocks are the bellwether, they are the barometer. And these stocks may escalate by as much as 250,000 tons. 250,000 tons in 1 month to approach a stock level in excess of 1.7 million, closer to maybe 1.8 million tons. Remember, the critical number for Malaysian stocks is 2 million tons. After 2 million tons, the market is bearish. And we seem to be going very rapidly towards that magical figure. In 1 month, we are going to rise by 250,000 tons. Very, very, very seldom has that happened before. And the market is reacting to that possibility. In those terms, this conference could not have been at a better time. We are also seeing in the world record production of soybeans. And as I said, because of the low price of WTI and Brent, palm and soya have lost the discretionary biofuel demand. There used to be a discretionary demand which used to kick in when biofuel premium over crude oil was very slight. That discretionary demand has been lost for several months now. Then US biofuel policy has yet to be announced by this new administration of Mr. Trump. However, there have been some strategic leaks, some expectations of more liberal US biofuel mandates. So as a result, soya oil futures have recovered, escalated, but it is very much a local US phenomena. So soya oil futures in the US have gone up. The basis in South America has collapsed. Let us now look at the outlook for palm oil in 2025 from here onwards. Indonesia has reduced its dependence on palm exports by focusing on B50 over the next 2 years. B40 is in the bag. It's now talking of B50. Will it happen? We are not sure. Supplies look plentiful, especially as production picks up from now. Palm exports are a challenge. Palm has now become slightly more competitive and must remain competitive if it is to regain market share. So what is the outlook? I expect palm prices to decline from now and more post-June. Production and stocks are building up. You saw MPOA figures saying that production is up, not just double digit, but in excess of 20%. Maybe the production was not as high as that, but some hidden production from previous months is being regularized. It could happen. One doesn't know. Normally, MPOB statistics are very good. but they are very good and very accurate over a whole year. Month to month, they do make adjustments. You find adjustments in local consumption, you find adjustments in non-bulk exports. So there could be some adjustment, and that is why we should not get too carried away by the higher rising trend of production. But clearly the trend is clear. It is rising, and this trend is going to remain in force for the next several months. Soya oil, as a result of palm becoming cheaper, is going to gain a premium over palm. B40 in Indonesia, I said I have some reservations about how effectively it is being implemented. We hope it is being implemented faithfully, but it definitely has stabilized and is not as low in terms of implementation as in January. It has stabilized. I must say that Indonesia has done a very good move to remove the subsidy on non-PSO, that means non-public sector consumption of palm biodiesel. It reduces the burden on the Indonesian exchequer, and it makes for more stability. That was a very good move, a very bold move, and the Indonesian government needs to be congratulated. I will go one step further and repeat what I said in Kuala Lumpur at POC, that President Prabowo, looking at Indonesia's national interest and looking at the interest worldwide of the palm oil industry, now must take the bold move to lift the moratorium on new plantations. Lift the moratorium, stipulate, legislate that new plantations will only be allowed if pursued in a sustainable manner. Implement the ISPO, but allow palm oil production to increase to create prosperity, wealth, and reasonable prices for the world palm oil industry. Let us look at other oil seeds. Rapeseed. Rape canola, that is rapeseed grown in Canada under the name canola, has escaped US tariffs and escaped some of the problems created by the Trump administration because it is covered by the USMCA. But the Biden administration, in its dying days, had changed the regime of subsidies for biodiesel in the United States. So canola oil no longer qualifies for those subsidies. So on the one hand, they have escaped the tariffs. Thank God for that. But they are no longer, so we will see canola oil going more and more into food use, replacing soybean oil, US soybean oil, which will be released from and diverted from food use into biodiesel use. This is going to moderate the extreme bullishness which would have come in soya oil had canola oil been tariffed. Fortunately, as I said, it is not tariffed, not yet. Canola oil, however, canola seed and canola oil face problems in their traditional market of China because of trade tensions between China and Canada. So we must hope that the new Canadian government will move quickly and decelerate, diffuse the tensions with China. Whether they do it or not, I am not sure. But they should, if they want the Canadian rapeseed canola industry to thrive. Otherwise, canola will remain under pressure in terms of price. Indian rapeseed production is good, about 11 million tons, slightly lower than last year. But there is a silver line. Because of the trade tensions between Canada and China, China needs rape meal, and China is now importing rape meal from India. That is a window of opportunity for good, high-class Indian crushers whose rape meal complies with the import standards of China. As a result, rapeseed crushing in India has become profitable once again. It is going ahead in full swing, with the result that India will crush more local rapeseed and produce more local rapeseed oil. And already in India, the price of rapeseed oil, which is a premium oil and which used to be the most expensive oil in the local market, is now the same level as soybean oil or palm, all oils. So rapeseed oil consumption is going to increase, production is going to increase, and it's going to be better in terms of local availability of edible oils in India. Let us look at soya oil. We have a massive crop in Brazil, an okay crop in Argentina. We have a very good start to the US planting season. That doesn't mean that the US crop is already in the bag, but it means that at least the plantings in the United States, we haven't lost as much acreage to corn as we were fearing. We have lost some acreage, but the plantings seem to be good. The season is off to a good start for the time being. As I said, because of the demand, the extra demand from the US biodiesel regime for soya oil, there will be very good crushing in the US, and meal is going to be a burden. All over the world, when you have high demand for soybean oil, you crush too many soybeans, and soybean is really a meal crop rather than an oil crop. So you have burden of too much meal being available. Soya oil futures, as I have said, have escalated and will keep escalating. But the basis in South America will fall, will remain weak, and that is something we need to consider. There is a possibility that in the next few months, Brazilian biodiesel mandate may be increased. We have to watch. There are also restrictions on used cooking oil and pomade, and several malpractices have been eliminated. So that is going to lead to higher use of soybean oil in US biodiesel and US renewable diesel. This is why futures have been strong. And in some countries, soya oil is gaining at the expense of palm, and this will pressure palm prices because palm exports will not show the same buoyancy as in previous years. We come to sunflower seed. Sunseed crops in 2025 are likely to be bigger than 2024 when they were a bit shrunk. If peace prevails in the Black Sea region, and at the moment it doesn't look like it, but if it does, that will lead to better cultivation, better agricultural practices, better inputs, and better crops. Also, sun oil prices in US dollars may gain if, as a result of peace and a ceasefire, the local currencies of Russia and Ukraine become stronger against the dollar. So, in my opinion, sun oil is going to remain a premium oil and will remain or regain its position as the most expensive out of the complex of normal vegetable oils. Quick word on China. China is returning to higher growth, but its vegetable oil consumption is likely to be flat. China is likely to be preoccupied with trade and tariff matters in 2025. US beans may gain in case of a settlement of the trade war between China and USA. But overall, I don't expect China to be a bullish influence in 2025. Let us look at India. Indian imports in 2025 may decline for the first time in many years, and I will explain that. Indian consumption has shifted from palm to soft oils. When I show you my projections, you will see how that has happened. The import duty hike of 2024 will remain in force in 2025. It looks like that. India may even want to increase the import duty. One cannot be sure. The Indian crush has improved, as I said, because China is buying Indian rape meal, and worldwide also demand for Indian soybean prices are down. So soybean meal in India is better placed and is being able to be exported. So because of better crush, India will have a better supply of domestically produced oils, and yet India will carry forward stocks of domestic oilseeds for sure. There is one big Indian bearish factor which the market has hitherto ignored. In 2025, India is unlikely to consume any vegetable oil for local biodiesel production. Previously, about 600,000 tons of palm, PFAD, palm stearine went into local biodiesel production quietly. But now it's too expensive, it's out. Several months there has been no biodiesel tenders, no biodiesel production in India. So that window of biodiesel demand for palm in India has gone. Why is that gone? Because the Indian oil, transport oil companies, oil marketing companies as they are called, the Indian petroleum refiners, they have been given a mandate, but it is an optional mandate. They can either use biodiesel or they can use ethanol for blending into gasoline. And ethanol is much cheaper than biodiesel. So they are all switched to ethanol and they are not too concerned about biodiesel. The prices they are prepared to pay for biodiesel are too low, too uneconomic. So that is why that window of market demand for biodiesel in India is gone. And that is a minus as far as palm oil demand for India is concerned. So look at my projections for 24-25. This is for the year ending October 25. And you see that compared to the figures I had projected at POC, in KL, I have slashed Indian imports by 1 million tons. Soya is down to 4.5. Palm is dramatically down to 7.45 million tons from the previous year's 9 million tons. Watch. Sun slightly down from 3.5 million to 3 million. And others, this is oil coming from Nepal under SAFTA, where there is a duty concession. That may include some palm, some soya, some sun. That is going to be a hefty 750,000 tons in my opinion. So total imports will be 15.7. Now, to look at the overall picture, world energy demand grew by 3 million tons in 23-24. We expect this year that it will grow by only 2 million tons. Mainly because we are not sure of the US biodiesel policy, we are not sure of implementation of B40, and India, we have lost some biodiesel demand. This may turn out to be wrong if the US biodiesel regime, which will be announced in the next 2 months or so, is more liberal and the mandate is much higher. But it's an open question. We don't know that yet. World food demand grows normally by 3 million tons. We think this year, with the world economy under pressure, we may only grow by 2 million tons. These are figures which are mostly constant from what I projected at POC in Kuala Lumpur. So net demand goes up by 4 million tons in 24-25 compared to 23-24 when it went up by 6 million tons. Look at the incremental supply. I have not altered these figures. I've kept them exactly the same as what I projected in Kuala Lumpur earlier in the year, which shows that total supply goes up by 3.5 million, total demand goes up by 4 million. Now, supply may go up slightly more because palm oil production is coming through very well at the moment, but it's still early days. Let's watch it. But palm oil production could rise more than 2.5 million tons this year. On the other hand, if the US biodiesel regime is much more liberal, much freer, then demand could rise slightly more. So But the important thing is that the production is kicking in towards the end, the last 6 months of 24-25. And the time of shortage is past. So most of the increase in supply is coming through from now. And that is why one has to be a bit bearish on the market. What are the price outlook factors? Trump measures like tariffs, sanctions and the trade war, lower energy prices, good North American weather, the trajectory of the US dollar, and the fact that supply expansion is coming in the second half of 2025. So what is the price outlook that I mentioned earlier? I said I expect palm futures on the BMD third month to trade between 4,000 and 4,600 between POC and 31st March. It was a narrow window. BMD made a high of 4,664 on 10th of March. I was expecting price to trade weak post-Ramzan, and that is exactly what has happened. Markets have now corrected and are trading below 3,900, which is making palm competitive once again. What are my projections? Between June and November, I expect BMD to trade down to 3,500 ringgits. We need to watch plantings and weather in North America from this month onwards, from May onwards. Soya oil futures on the CBOT will remain strong because of the complicated and restricted incentives for US biofuels. As I mentioned, no incentives for use of canola. Very good incentives for use of soya oil, for byproducts, for tallow. So these are complicated matters and all this is yet to be announced. Policy is in the making. So one has to remain reasonably friendly to soya oil, but US soya oil. South American soya oil is a different matter altogether. So while CBOT soya oil futures will be strong, the cash basis in South America will weaken. We were talking amongst several that it is possible that we will have soya oil futures at 50 cents a pound and basis at minus 500. Exactly that has happened. Basis has gone to minus 600 for the forward months. And that movement can continue. Futures rise, basis falls. Sun oil prices will remain at a premium. All this can and will be affected by the actions of President Trump in terms of a trade war and in tariff. Lauric oils have been very volatile and very expensive in terms of coconut oil in the last few weeks. But in my opinion, the peak as a result of many market factors is gone. The peak is over. Coconut oil production is anemic and prices will remain above $2,000 CIF Rotterdam for an extended period of time. They had gone up to 2,700 in some cases. I don't think much was traded at that level. But I do expect them to remain above $2,000. Palm kernel oil will be under pressure as palm production picks up. But don't expect palm kernel oil prices to dramatically fall from the current level of about 1,800. They will fall by $200-300 a ton, but not much more than that. Because new oleochemical capacity, large oleochemical capacity is coming on stream, and that will run on palm kernel oil. So in conclusion, and once again, congratulations to all of you. My apologies for not being here in person. Actually, my colleague Vikash Sharma was going to be here in person and he was going to deliver the paper because these papers are nowadays always written jointly by us. But he could not make it as well. So that is why this video presentation. I think the biggest price factor is going to be tariffs and US biodiesel policy. Supplies look comfortable. But remember, these are times of climate change. So you cannot be too bearish. Edible oil and FMCG users can look forward to price relief in the second half of 2025. But keep an eye on the US dollar. If the US dollar weakens too much because of Trump tantrums, then US dollar prices cannot fall in commodities. We have to be careful. So with those words, ladies and gentlemen, I wish you good luck and God bless. Thank you very much. And I hope we come to a good conclusion.